Aloha everyone, Joshua Hayes at bigwavetrading.com with another weekend public video. Want to remind everybody, the stock market is geometrical, it is not linear. It moves based on multiple time frame analysis. It always depends on what time frame you are working on. Whenever you ask me, what do I think about the market? Well, what time frame are we on? Are we on a daily, weekly, monthly, intraday time frame? All of that needs to be taken into consideration when we think about some of the things that we've seen and heard from the market or from pundits regarding the overall market the past week. I have seen the statistics showing that we basically have had, for the past 3 sessions before Friday, 80% of the New York Stock Exchange issues advanced. And out of those advancing issues, 80% of the volume went into those issues. Only happened twice in the past 80 years. The first one, the start of the 1980s bull market. The second one, at the start of the 2009 bull market. So are we in a new bull market? Well, normally, both times, whenever that was happening, I had leading stock charts that look like ZM, GSX, more than enough before this uptrend ever started. Right now, besides a stock like HEBT, which is GSX, and the only long position I have on an end-of-day basis, ZM, I'm not seeing too many other leaders out there. So if you're thinking that this is the start of a new bull market, that is not in your favor. But, we'll see. It could turn into something. But as of right now, what we have off the lows to now is nothing more than a dead cat bounce. We've bounced right around 19%, almost 20% from those lows before Friday's session. And if we run an analog chart from the beginning of the year to now, we basically have 2 other time frames that we're very similar to. The 1987 stock market and the 1929 stock market. The 1929 stock market had a 35% decline, had an 18 to 19% bounce just like we're having, and then fell another 26.8% to make a new low before it then rallied into the 30s before you know what happened, the Great Depression. In 1987, we had a 15% bounce off those lows. We still fell another 13%, retested those lows at a higher level, then we rallied higher. So if you think the market is going to go straight up from here, I think you're being a little delusional and a little hopeful and a little bit wishful thinking. Could it happen? Absolutely. I'm open-minded. I'm not taking the bull side or the bear side. I'm taking the analytical side. Open mind, using the scientific method, and then applying the game theory to that scientific method to make money in the market. Now, on an end-of-day basis right now, we're not getting a whole lot of new long positions. I'm only long one name. The past week, I had no new long signals. How funny 2 months ago, people were complaining about too many long signals. Now I'm starting to get complaints about not enough long signals. Folks, if you want to risk your capital on an overnight end-of-day basis when the VIX is currently at 65, be my guest. Been around too long. Traded through the 2002 crash, traded through the 2008 crash. I've studied my market history. Based on everything that I see, this is not a complete bottom. And if it is, we have plenty of time for the best setups to occur for us to take advantage of the next uptrend if and when it happens. But for now, until that VIX gets back down to 20, there's no reason to be wanting to run into this market anytime soon. That being said, I want to look at some charts on stockcharts.com that could indicate, hey, maybe the worst is behind us. Remember, I have that open mind. But for now, I want to stick to my tried and true indicators as we move forward here. The ones that I've always used to keep me on the right side of the market. First off, I want to remind everybody, you're looking at the monthly time frame here of the time segment volume 24 with 12 moving average period. This thing crossed on the S&P 500 in 2018, right around September, October. While there was a little rally during that time, you see what's happened? That time segment volume stayed negative the entire time. I, once again, thought it was lagging. It was leading and warning us that that was a very unhealthy uptrend. At no other time in the past, You can go back, these, as you can see, we can go all the way to the 80s on this indicator, and we got to truncate it, so you got to move forward like this so you can see like the other times. During all great uptrends, where the most money is made, where the best setups happen, where I can have the most conviction for a long trend on an overnight basis to make the most money possible in a long position, this monthly TSV is positive. You can see here, when it's positive, good things happen. When it's negative, positive, good things happen. Negative, still the market's strong. Not too bad, but we'll look at what happens when it goes negative in 2007. Ugly till 2009, then it goes positive, good things happen. We get chopped up a bit, but still that moving average line, we're now negative again. Notice how the market goes nowhere. Then from 2016 till we finally cross in 2018, this uptrend to this uptrend, you can see good things happen. We've been negative since the middle of 2018, and it has been worse on the Russell 2000 that crossed back in June, July of 2018. And as you can see, that indicator held up as the IWM never took out its 2018 highs. And now you see what's happening in the market. So that indicator has worked on a monthly time frame. Once again, I was wrong. Thought it was lagging. It was leading. But on a monthly time frame, until I see this monthly TSV cross back up above that signal line, and that signal line's flattening out and trending up, there is no reason for me to put 20, 30, 40, 50% of my capital into any one new long position. There's no reason to put 10, 20% of my capital in any new long position. Willing to put 5% in a solid setup like ZM that I just showed you that I'm long. And I did get up to 3%, would have been 4% had it been in the perfect speculator scan. But that is the main indicator. And if that's negative, I don't even think about the possibility of any stock that I take as a long position to be a big long-term winner where we can hold it for months, months, and months and months and expect 100, 200, 300, 400, 500, 1,000% gains from. So with that out of the way, you see what it looks like now. You see that the monthly TTM momentum has turned negative. Not good. SPY, momentum is now going the wrong way, confirming the TSV. DIA, momentum is going the wrong way. QQQ, momentum is finally shifting in the other direction. Unless this blue line is growing and increasing with the dark blue, there's no reason also to be too bullish on this market. We also have a red dot up here. Subscribers, explained it to on this video. We just don't have time. So let's go down to the next time frame, weekly. What do we have here? Weekly TSV is negative. The signal line is sloping down. We have negative momentum. We have red dots. This is a dead cat bounce. Volume was lower than the week before. It's a dead cat bounce until it is not. The DIA, that's bullish. This is a very bullish engulfing signal. Still, we don't have a green light means go. Negative momentum. TSV is negative. We can't get excited about it yet. IWM, already saw that. Negative, negative, red dots. The SPY, which is my main index that I focus on. Lower volume bounce, negative momentum, negative TSV, red dots. On a daily basis, yeah, momentum is turning higher, still very negative. We do not have a squeeze. TSV has gone higher, but that signal line is still trending lower. We have green dots. It's something to work with. And as you can see in every other index, it's the same thing across the board. So why do I still think this is a dead cat bounce? Because this is not enough of a retest of a low in the IWM. And technically, the SPY was still making lows. There's been no retest. So I start looking at key lines. I always use the 9 exponential moving average, the 21 exponential moving average, the 50, 200, and 100-day simple moving averages. All of these lines are going to be resistance levels until they're broken. The 9 EMA initially acted as a resistance level, but then the SPY finally broke it. Let me move that over a little bit. So, got to do this. Sorry. Move that over a little bit. Nope, that doesn't even help. Okay, never mind. So the SPY has made it through its first resistance line. Now we have to battle the 21 EMA. Same with the QQQ. Same with the DIA. And the IWM isn't even there yet. After that, you have all these other moving average lines. The next thing I want to look at is something I always do, is the Fibonacci levels. So you look at Fibonacci right here, the retracement zones. We got above the 23.6. We're going to need to now find support at it. But right after that, what do we have? 38.2, which is lined up with the 21. So this is going to be significant short-term resistance. Then we have the 50% Fibonacci retracement level, then the 61% Fibonacci retracement level. So all of those zones are going to act as resistance zones. I have a Fibonacci projection here, but it's not the same as Fibonacci symmetry. So another thing I like to do is project major lows to major highs back to major lows for other resistance levels. If you have toss with Ameritrade, you can do this. It's Fibonacci symmetry. You connect the line here to this top here to this low here, and it will draw Fibonacci symmetry resistance levels. You can connect this low here to this high here to this low here. This low here to this high here to this low here. And you can even do that from this one to this one to this one. And every other one you see, you can go from here to this high to this low, and you'll see other Fibonacci resistance levels that are going to come into play. Now I want to erase this and show you, not only that, we have price resistance levels. This low, which also lines up with this high, that's going to be a major resistance level. This low right here, which kind of lines up with this high, so we'll kind of split the middle, that's going to be a major resistance level. This recent high right here, that's going to be a major resistance level. And even our most recent high is going to be a resistance level, which once again lines up with that 38.2 and 21 EMA. So we have price, Fibonacci symmetry, Fibonacci retracement, moving average resistance levels galore that we have to fight through before we can reasonably expect to get to new highs. Now, could we get to new highs before or through all of this resistance level and not see any resistance? Yeah, it's possible. But I tell you what, we're going to need a lot more volume to the upside. Compare the volume here to the volume on the downside. And if you think that, hey, we don't need volume anymore, I want to remind everybody, how has every other V-shaped rally gone lately? Yes, they can extend for a while. They sure can. But when they walk that tightrope higher, they eventually fall off a cliff. This has been happening since 2017's uptrend ended. These were V-shaped and it was bad, but hey, remember what we had going for us during that time? The monthly TSV telling us to stay on the right side. Not to mention that we came out of a monthly tightest squeeze with the momentum line firing higher. So we had that happening, and then we got the confirmation here. So that was the easy part. But even then, the V-shaped rallies, they didn't always turn out well, did they? Sell off, consolidate, consolidate. This one is when it finally got smooth again, and then we start hitting that V-shaped nastiness. And as you can see, it always ended the same way. So I don't think we're going to be able to V-shape rally to new highs, but is there any chart out there that gives me some hope that it could happen and or that we could have another V bottom like the 2018 lows? Yes, and we'll look at that before we wrap up this video. Since we're looking at the SPY on my main telechart version 19 screen, we'll go ahead and start off with the SPY at stock charts. Now, once again with SPY, look at how far we've come off the highs. If anybody thinks that we're just going to V-ramp to new highs in the current environment with what's going on right now, wow, you've got a lot of hope. I hope you're right. I hope it happens. But I tell you what, if you actually understand the science behind the coronavirus and understand where we are as a nation regarding our health care, our best system in the world, boy, I hope you guys are all right, but I don't share that same sentiment based on the facts and evidence and the weight of the evidence at hand. Not my opinion. But look at the SPY here. Let's go ahead and annotate this, actually, because this will be a good reference point. So, look at this downtrend move, right? Look at that slope. Now look at the accumulation distribution line. You might be asking, what is the accumulation distribution line? The accumulation distribution line doesn't take the entire day-to-day price movement into consideration when being calculated. It only takes the volume and the price movement intraday into account. So basically, A lot of this recent selling has all been done in the overnight session. On the intraday session, from a day-to-day basis, there's actually accumulation going on intraday in the market from the early phases of the sell-off. That's interesting. Okay, one down, the SPY. Let's look at the QQQ. Let's annotate it. Same thing. Look at the trajectory of this downtrend. But look at this accumulation distribution line. Yeah, they're selling it off overnight, but do you see all these open body candles, all these hollow candles during the fall, all these reversals? Hey, that's a sign of hope. But remember, in the sign of hope, it's hard to see. The RSI is still below 50 on a daily here on QQQ, still below 50 here on the SPY. Then we're going to move over to the IWM. You can see RSI is still below 50. Remember, you want it to be at least above 50 to be in a quote, trending or uptrending friendly market. But once again, we'll go to the annotate here, pull this up, look at the slope of this decline. Now the IWM is still weak, but compare this slope with the downtrend slope, and once again, you can see positive divergence. And then the best one of the bunch, the one that's actually a little shocking. Look at this. This is the Dow Jones Industrial Average. Look at that plunge. But during that time, look at what the accumulation distribution line has done. In fact, it's hitting a new all-time high following the recent bounce. That's crazy, right? Absolutely. So who's right? The bulls or the bears? Well, we're going to find out. The accumulation distribution line, I'm thinking, is a major lead line. So if we have seen a bottom, this is what's telling us for a fact that we have. Forget about those 80% up days clustered with volatility up at 65 plus. Forget about, because I think on all of those 80% up days, it was like an 80% volume down day on the down stocks on Friday. So whatever. But this accumulation distribution line, all of these lines are very curious to me. This all makes me wonder what's happening intraday. That being said, there's nothing we can do with any of that information until my TSV is not only bullish on a daily, I must see the slope of this line be higher again, and on a monthly time frame, until that TSV gets back above that signal line, there is absolutely no reason to expect any great signal to materialize in any winning stock that's going to produce for us a 200, 500, 1,000% gain in a few months. Hey, we get them. That's what I find. We had some big winners even in 2019, despite this quote, weak uptrend that's particularly failed. Did we have any huge winners during that time? We had a couple of very large winners, 200, 300% winners, but still, they didn't give clear, load up signals. We now know why with the monthly TSV, but for the short term, until the weekly, this indicator looks like this and is coming out of some kind of squeeze, until this is bullish, and on a daily, until we get back above this zero line minimum. This is a start. There is just no way I can be bullish on this market on any time frame whatsoever. Short term, no. Intermediate term, no. Long term, no. There's not enough evidence out there. If we move higher, great. I'll be the first to be looking. Every day, I scan every evening looking for the best stocks. Like I said, my favorite setting up right now is GSX, and it's not quite there. I only have taken one long signal since this session here, and it works. And I'm already out of 50% of it, but it was up 40% of its highs, and it's up 33% now. Guys, I know what I'm looking for. I know what I want to see. I'm not just going to issue signals to issue signals. I'm not just going to take trades on an end-of-day basis, take trades. Now, right now, I have other obligations that are keeping me away from day trading because the market opens at 3:30 a.m. now on Maui. It was 4:30 a.m. before daylight savings time. I normally am not back to my house but before 11 p.m., 12 a.m., so day trading right now is not working for me. But we have chat room members that are doing very well based on the methodologies I have taught them. There are certain patterns that we look for using the 9 EMA VWAP, halt, volume, catalyst events during the pre-market, the volume on top of the daily setup overall. I've given a big list of stocks this weekend to have in the back of your mind that if we do have news on them, to attack them when and if they do have that pre-market or even intraday news catalyst, especially if it's coronavirus related, to then watch for potential setups, which include Fibonacci retracements back to VWAP, the 9 EMA, the setups, the squeezes, the breakouts, or retaking previous level halt prices on stocks that really are cooking and moving early in the day. But the bottom line is right now on an end-of-day basis, guys, I know how to keep you safe. Cash is king. When cash isn't king, the signals will return. I'll be the first to be taking them, and I'll be increasing sizes on the best signals. And I'll let you know which signals are the best and which signals this is the one we need to attack with size. Whether you do with 20%, 100%, 5% of your account, that's up to you. Everyone's risk tolerance is different. I know what mine is. I know what I'm looking for. When they return, we'll hit it hard and we'll hit it strong. All right, everybody, I'm going to wrap up the video lesson here. If you liked what you saw and heard, please give me a like, hit the subscribe button, ring the bell. If you have any questions or comments, please leave them below. I respond as soon as possible to each and every single one. All right, have a great rest of your weekend. Stay healthy, be smart, be wise. Cash is king on an end-of-day basis. The volatility index is still very high. There's going to be a lot of noise. Ignore the noise. Stay unbiased. Stay disciplined. Aloha.